Is a golden age for borrowers also a golden age for investors, or are risks building in this space? For more, I'm joined by Tom Kozlik, head of credit and municipal strategies at Hilltop Securities. Tom, welcome back.
Thanks for having me, Kelly.
So let's talk about all the issuance that we're seeing, which typically might mean, they don't always all get the best price and yields are maybe a little bit high and that kind of thing. But explain what the dynamics are if we take a snapshot of today in the muni market.
So where we are to start December, I'd say that the municipal market hasn't been immune to the recent volatility. That being said, the municipal market has responded in its own unique way, as it usually does, right? One of the things that we've seen over recent, not just last week, but over recent weeks and even months, is that fund flows, while they were very strong, very, very strong in the first half of the year, they started to tail off over at the end of the summer. They were a little lower to begin November, and they fell to about 36 million last week. That being said, I think that there are probably some technical or market-specific reasons of why the number fell so low. I'm expecting that fund flow numbers are going to strengthen. They're going to be a little stronger, partially because I'm still seeing a very significant supply and demand imbalance. As you were just talking about, the amount of issuance really matters. And the fact that even take this week for an example, there's 18 billion of primary market issuance coming, and I still don't think that that's going to come close to satisfying investor demand. So again, to start December, what we're seeing is a very strong amount of demand for municipals, even though the fund flow numbers haven't been as strong in the second half.
Sure. So you think this year could do 460 billion of issuance, next year maybe 495, which would be a record. So in other words, even though we're seeing record supply in this space, you basically think there's record high demand. How long should that situation last?
That's right. I think that we're going to see 450, 460 billion this year. That was actually pretty close to our forecast for this year. Next year, I think that we're going to see about 495 billion. One of the things that could have increased issuance for next year and in coming years are some of the fiscal policy ideas that had been floated around this year. But I'm expecting that going into next year, that 495 billion number, that forecast, I still don't think that that's going to meet the demand that's out there. I still think that unless issuance rises, that demand is going to outstrip supply.
So let's say, my financial advisor is walking through 2022 strategies and saying, okay, you need to be in some muni bonds. What are some things I want to be included? What are some things that I would not want to be included? If you were advising kind of your friends and family, what would you say? Hey, just make sure you do the basic due diligence.
Yeah, the fact of the matter is that we really like the recovery story. As you mentioned in the outset of this spot, we believe that there's a golden age of public finance right now, and that's really been solidified with that $650 billion that came from the Rescue Plan Act. That's going to send $350 billion to state and locals. It's sending $130 billion to schools, and the balance to other sectors like higher ed, healthcare, and as part of that recovery story, we think that municipals are more insulated than other sectors. And so we really like the airport sector. We really think that the recovery is going to continue there. And we especially like the larger airports. We like the major toll roads, higher grade healthcare, and especially the higher education with strong brand name recognition, and also housing finance agencies. We really like that sector as well.
Interesting. Tom, always with a bunch of actionable ideas for us. We appreciate it.